Every day, trillions of dollars move around the world. No speeches, no headlines, no one votes on it. But if this trade stopped for even a few days, the global economy would feel it immediately. Factories would slow, currencies would swing, markets would panic. Most people have never heard of it, yet it quietly keeps the system alive. This matters now because the world is more connected than ever and more fragile. Supply chains stretch across oceans. Debt crosses borders instantly. Confidence moves faster than ships or planes. And this hidden trade is what keeps everything from locking up. Here's the simple version. Some countries export goods. Others export money. The United States buys more than it sells. It runs a trade deficit. That sounds like weakness. It isn't. When the US imports goods, dollars flow out. Those dollars don't disappear. They come back. Foreign exporters take those dollars and buy US assets. Treasury bonds, stocks, real estate. Goods go one way. Capital comes back the other. That loop is the trade. It's what allows countries like China, Germany, and Japan to keep factories running, and allows the US to keep borrowing cheaply. Everyone complains about it. No one can easily escape it. Because if exporters stop sending goods, their economies slow. If they stop recycling dollars, US interest rates rise. The system balances itself through pressure, not agreement. Here's the uncomfortable part. This trade isn't about fairness. It's about stability. Export-driven countries depend on foreign demand. Deficit countries depend on foreign financing. Break the loop, and both sides lose. That's why global imbalances last for decades. Publicly, leaders talk about reshoring, independence, and fixing trade. Privately, they're careful, because the hidden trade also props up currencies, pensions, and financial markets. US debt becomes the world's savings account. Foreign surpluses become America's funding source. It's absurd, and it works. Until it doesn't. If trust in that loop weakens, through politics, sanctions, or financial stress, money moves faster than factories can adjust. That's when markets seize up. So the global economy doesn't run on free trade slogans. It runs on a quiet, continuous exchange of goods for promises. And the real question isn't whether this trade is sustainable. It's what happens the day the world decides it doesn't want to play anymore.